Welcome to an exciting journey towards mastering wealth, strategies for financial success. Today we delve into the strategies that have been proven to help people transform their outlook. But first, let us understand what success actually is. Financial success is a term that can be quite subjective, as its definition varies from person to person. For some, it might mean owning a luxurious home. For others, it could be saving enough money for a comfortable retirement. Some people might interpret it as simply being able to live comfortably without the constant concern looming over their heads about next month's bills. But at its very core, financial success is about meeting your goals, whatever they might be. It's about having the freedom and luxury to do what you want, when you want, without the constraint of financial limitations hanging over you. The importance of having a financial plan cannot be overstated. It's akin to having a roadmap. It lets you understand where you are currently standing, where you aspire to reach, and the route you need to take to get there. Think of it as a GPS for your finances, guiding you towards your money goals and helping you navigate through the bumps and detours that might crop up along the way. Over the course of this video, we will be discussing in-depth several key strategies that can guide you on your path to riches. These strategies are not some magical get-rich-quick schemes. Instead, they are methods that have been proven to work, provided you are disciplined, patient, and willing to learn and adapt. We'll start off by discussing the importance of understanding your current status. Just like you wouldn't embark on a journey without knowing your starting point, you cannot plan your financial future without understanding where you stand today. Remember, the first step to wealth starts with a decision to take control of your future. Are you ready to embark on this enlightening journey towards financial success? Let's dive in. Grasping your current financial status forms the foundation for a solid financial plan. This is a pivotal first step in gaining control of your finances and directing them towards prosperity. Let's delve deeper into this means and its importance. Understanding your financial status requires thorough knowledge of four fundamental components of your financial picture: income, expenses, debts, and savings. Each of these components plays a significant role in outlining your financial health and potential for growth. Income is the lifeblood of your finances. It symbolizes the cash inflow that powers your lifestyle and financial goals. Remember, income isn't just your salary. It encompasses any cash inflow, be it from a part-time job, investments, property rent, or unexpected windfall, like an inheritance. Understanding income involves having a comprehensive view of all your income sources and how much each one adds to your overall financial picture. This understanding helps you identify areas of growth and opportunities to increase your cash inflows. Next, we talk about expenses. Expenses are what diminish your income. They can be fixed costs like rent or mortgage payments, or variable costs like dining out. Expenses, though unavoidable, need to be monitored closely. Detailed tracking of your expenses helps you understand your spending habits and rectify them when necessary, enabling you to save more effectively. Debts are the third component. They comprise all the money that you owe. Debts could be credit card bills, student loans, or a mortgage. Understanding debt goes beyond the monthly payments. It's crucial to consider the total debt amount, the interest rate, and the repayment timeline. This will enable you to find strategies that can reduce interest payments and hasten debt repayment. Finally, let's discuss savings. Savings are your financial safety net. They are the buffer that guards you against sudden expenses. But savings are not just about having money stashed away. It's about ensuring that you have enough to cover your living expenses for a few months in case of an emergency. Understanding your savings position gives you a clear view of your financial security and helps you evaluate if you are on course to achieve your financial goals. Understanding these four components, income, expenses, debts, and savings, provides an honest and comprehensive snapshot of your financial status. It's more than just crunching numbers. It involves gaining insights and perspectives that can guide your future decisions. You can set budgets, devise goals, and chart out a roadmap to fulfill them. However, this process requires honesty and might reveal some uncomfortable truths about money habits or challenges. But the benefits of this clarity far outweigh the discomfort. It equips you with the knowledge to alter your situation. Understanding your financial status is akin to having a mirror. It reflects your financial health and shows the way forward. It reflects the reality of your finances. Goals give direction to your journey. Without them, you're just wandering aimlessly. To truly understand the importance of setting goals, let's start with imagining an exciting scenario. Suppose you're setting out on a grand road trip that you've been planning for months. As the day of departure arrives, you can't just throw caution to the wind, jump into your vehicle, and start driving without knowing where you're heading, can you? You need a plan, a destination. You need to know the best route to reach your location. The same theory applies when it comes to your financial voyage. It's not just about moving forward, it's about knowing where you want to go, how you plan to get there, and what steps you should take to reach your destination. This is where the concept of goals comes into play. You need to know where you want to invest, what you want to achieve. Are you aspiring to buy a mansion? Or maybe looking to build your own startup? Are you planning to retire and travel around the world? Being crystal about what you desire gives you a definitive target to work towards. A dream, no matter how big or small, turns into a goal the moment you put a deadline to it. Measurable goals, as the term suggests, allow you to measure your success. It's like mapping your progress on a graph. If your goal is to save $100 grand for a deposit on a penthouse, you can regularly track your savings and see how far you've come and how close you are to the finish line. This not only helps you evaluate where you stand, but also acts as a robust motivation to keep you moving forward. Achievable goals are your stepping stones to success. They can be ambitious and bold, but they must always be within the realm of the possible. Aiming for the stars is great, but aiming for a galaxy billions of light years away might not be so feasible. If your present income is modest, aiming to save up a fortune in a span of a couple of years might be a far-fetched idea. Setting unrealistic expectations can result in disappointment and can even force you to abandon your goals midway. Relevant goals, on the other hand, are those that echo your long-term money aspirations. Let's say your ultimate goal is to retire early, buy an RV, and embark on a journey across the globe. In such a case, saving for a luxury sports car or an exorbitantly priced piece of artwork might not align with your plans. Your goals should always complement each other and help you move closer to your dreams. Time-bound goals have a specific deadline. It's like setting a countdown timer, be it a year, a decade, or even longer. Having a set timeline to achieve your goal instills a sense of urgency, keeps you focused, and ensures you remain committed to your financial journey. It's important to remember that goals are not carved in stone. Your journey is a dynamic one, and your goals should be flexible enough to accommodate significant life changes. Maybe you get a handsome raise at work or inherit a fortune from a distant relative, or perhaps you welcome a new member into your family. All these life-altering events can and should prompt you to reassess, readjust, and realign your goals. Starting small shouldn't deter you. Each small step you take today will lead to substantial results in the long run. The most crucial thing is to make a start, no matter how insignificant it may seem at the moment. As they say, a journey of 1,000 miles begins with a single step. So take that step, set your financial goals, and embark on your journey towards independence. Remember, goals are the compass that guides your money to where it needs to go. Step 4, the path to financial success. You're setting out on a journey towards building a prosperous future. You wouldn't dare to begin this expedition without a carefully thought-out, comprehensive roadmap, would you? Now picture this journey as your voyage. The key to this expedition is your cash discipline, understanding the value of money and making smart decisions, rather than a mere budget. The roadmap is the guiding principle that leads and keeps you towards your financial dreams. It's a strategic instrument that aids you in shaping your economic future, assets, and tracking your progress persistently. You may be thinking, how can I cultivate financial discipline and understand the value of money? It's simpler than it appears at first glance. Step 1. Familiarize yourself with your earnings. Your income is the backbone of the journey. It's the money you earn every month from your job, a profitable side project, investments, or other sources. It's crucial to have a lucid understanding of your total monthly income, as it lays the foundation of your wealth plan. Step 2. Comprehend your expenditures. These are the building blocks of your financial journey. They encompass fixed costs like rent or mortgage, utilities, and car payments, alongside variable expenses like groceries, leisure activities, and personal care items. A detailed understanding of your expenses aids you in making better decisions about resources. Step 3. Establish financial goals. Your plan represents the destination on your financial journey. They signify what you're saving for, such as a down payment for a house, a retirement fund, or a dream vacation. Success is not merely earning and spending, but also setting specific goals. Once these steps are firmly established, you're ready to strategize for a successful wealth journey. Remember, The roadmap to financial success should be adaptable and flexible to accommodate changes in life circumstances. Therefore, reassess your financial strategies regularly and make adjustments as needed. Lastly, be patient with yourself. Achieving financial success is a skill, and like any other skill, it takes time, effort, and practice. Don't be disheartened by mistakes or deviations from your plan. Keep moving forward, keep learning, and keep refining your strategy. The path to financial prosperity takes time. You're in it for the long run. Remember, financial success isn't about restricting your spending, but planning your earnings to ensure effective use. This is the essence of discipline and understanding the value of money. It's your guide to prosperity. An emergency fund is your financial safety net. It's there to catch you when life throws surprises your way. Often life is compared to a journey, a path with unexpected twists and turns, ups and downs, highs and lows. Now, let's take a moment to imagine this journey as the open road. Picture yourself cruising along on this highway of life. You've set your financial goals. You've established a budget, a roadmap, if you will. It's all clear skies and smooth driving. And then, without any warning, out of the blue, trouble strikes. Perhaps your car, which you rely on for your daily commute, breaks down unexpectedly. The cost of repairs can be hefty, easily running into hundreds, sometimes even thousands of dollars. Or imagine waking up one day to find your roof leaking. The cost of a new roof or even significant repairs can be astronomical. Maybe, in another scenario, you're faced with sudden job loss. It's a reality many people have faced, particularly in these uncertain times. These are the financial potholes. The unexpected bumps in the road can send you veering off course, detouring from the financial path you've set. This is where the concept of an emergency fund comes into play. An emergency fund is like a financial buffer zone. It's a protective measure, a safety cushion designed to help absorb the shock of these unexpected expenses. It's the buffer that prevents these unforeseen costs from derailing your financial journey. At its core, an emergency fund is essentially a stash of money set aside specifically to cover unforeseen expenses. It's a rainy day fund for the days when life decides to unleash a storm. The nature of this fund is latent in its name. It's not for planned expenses or luxury purchases. It's not money kept aside for a dream vacation or the latest tech gadget or that designer bag you've been eyeing. It's for emergencies, pure and simple. It is the money that keeps you afloat when life throws you a curveball. So, how much should you have in your emergency fund? While there's no one-size-fits-all answer, a good rule of thumb is to aim for 3 to 6 months worth of living expenses. This gives you a comfortable cushion to fall back on should you need it. However, it's essential to remember the size of your emergency fund will vary depending on your individual circumstances. For instance, if you have a high-risk job where income can be inconsistent, or if you have a large family with more dependents, you might need to save more. Now, an important aspect of an emergency fund is where you should keep it. It needs to be easily accessible in case you need it quickly, but not so accessible that you're tempted to dip into it for non-emergencies. Consider keeping it in a high-yield savings account. This way your money is not just sitting idle, it's growing, albeit slowly, thanks to the magic of compound interest. Building an emergency fund takes time and discipline. It's about consistently setting aside a portion of your income, little by little. It's not the most exciting part of personal finance, but it's definitely one of the most critical. It's forward thinking, planning for the unexpected, ensuring you have a safety net. Every dollar you put into your emergency fund is a dollar invested in your peace of mind, in your future stability, and remember, the goal of an emergency fund isn't to make you rich. Instead, it's a financial tool to keep you from becoming poor. It's a buffer to protect you from unexpected money shocks. It's to ensure that when life throws those financial surprises your way, you're ready to catch them and carry on. An emergency fund is not just a financial term or a smart money move. It's an essential tool for wealth. It's a symbol of being prepared, of being proactive, rather than reactive when it comes to your personal finance. An emergency fund gives you peace of mind, knowing you're financially prepared for unexpected expenses. Debt is like a leech. It sucks away your wealth, leaving you financially drained. It's a chilling reality for millions across the globe. Debt has a way of creeping into our lives, often uninvited, and then sinking its teeth into our financial freedom, leaving us gasping for air. Imagine trying to fill a bucket with water, however. There's a hole in the bottom. The water keeps slipping away, doesn't it? It's an uphill battle, one that seems to have no end. This is what debt does to your wealth accumulation. You work hard, earn money, but before you can use it to create wealth, it gets drained away to pay off the debt. This is the harsh reality. So how do we plug this hole? It's simple, but it's not easy. We need to eliminate debt. The path to financial freedom isn't straightforward, nor is it short. It's a journey that requires commitment, perseverance, and a set strategy. Only then can we hope to overcome the debt mountain that stands towering above us. There are a few strategies you can employ to accomplish this. Each one has its unique characteristics, its pros and cons, and success depends on your individual circumstances. You begin by targeting your smallest debt. Focus all your efforts on it. Pay it off as quickly as you can while making minimum payments on your other debts. This approach allows you to see quick wins, which can provide the motivation needed to keep going. Seeing a debt disappear can create a sense of achievement, and that feeling can fuel your drive to tackle the next smallest debt. Once you've paid off the smallest debt, you move on to the next smallest debt, and so on. The momentum builds up, wins keep coming, and before you know it, you're rolling down the hill of debt elimination, unstoppable and invincible. The avalanche method takes a more mathematical approach. It's a strategy that requires discipline and perseverance. Instead of starting with the smallest debt, you start with the one with the highest interest rate, regardless of its size. This is the debt that's growing fastest, the one that's eating away at your wealth at the quickest pace. It makes sense to tackle it first, to stop the hemorrhaging before it's too late. This method can save you more money in the long run since you're focusing on the debt that's costing you the most. However, it requires discipline, as it might take longer to see results. You might have to wait months, even years, before the debt is fully paid off, but if you stick to it, the rewards are substantial. Both have their pros and cons. The snowball method provides quick wins and builds momentum, while the avalanche method tackles the most expensive debt first. The best method for you depends on your personality, your debts, and your financial situation. But remember, the most important thing is to start. Action is the antidote to despair. The journey of 1,000 miles begins with a single step, and the journey to financial freedom begins with the first payment towards your debt. So, take a good look at your debts. Examine them, study them, understand your financial position. Then, choose your strategy. It could be the avalanche method or any other strategy that suits you. Start that journey. Sure, it won't always be easy. There will be challenges, bumps on the road, maybe even setbacks. But you're not alone. Millions are walking the same path, struggling with the same issues. Reach out, seek help, learn from others. It requires persistence and determination. But remember, every step you take, no matter how small, brings you closer to your goal. After all, eliminating debt is liberating. It's like breaking free from financial chains. Investing is the key to wealth growth. It's how money makes more money. This principle has remained true for centuries and holds an essential place in modern society's economic structure. The fundamental idea behind investing is simple, yet the landscape can be complex, multifaceted, and incredibly intricate. We often hear phrases like money begets money and let your money work for you. But what do these phrases mean, and how can we harness these concepts to grow our own wealth? Let's dive deeper into the exciting world of investing. Investing at its core is about buying assets that you believe will increase in value over time. These assets could be an array of diverse commodities ranging from stocks and bonds to real estate and mutual funds. The concept is simple. You buy these assets and then either sell them later at a higher price or earn income from them over time. However, the processes and mechanisms involved in selecting, buying, and selling these assets can be more complex and require a good understanding of the market and its trends. Let's now talk about the integral principle of investing, diversification. Think of this concept as betting on a horse race. If you put all your money on one horse and it doesn't win, you lose everything. Now consider spreading your bets across several horses. It doesn't guarantee a win, but it significantly increases your chances. In the same way, by spreading your investments across different types of assets, you're not putting all your financial eggs in one basket. This strategy can protect your wealth from the ups and downs of the market. More so, it allows you to tap into different sectors of the economy, thereby broadening your financial horizons. Moreover, diversification can also help reduce the risk of losing your investment. In the unpredictable world of investing, there will be times when certain asset classes, industries, or sectors may not perform well. If you had put all your money into these, your investment portfolio would suffer significantly. But if you were diversified, the good performance of some investments could help offset the poor performance of others, thus balancing your portfolio. Another exciting aspect of investing is the concept of compound interest, often referred to as magic by financial enthusiasts. This term might sound mystical, but it's a simple mathematic principle applied to finance. The magic is simply the concept of earning interest on your interest. For instance, let's say you invest $1,000 at an annual interest rate of 5%. After 1 year, you'll have $1,050. Now, the magic happens in the second year when you earn interest not just on your initial $1,000, but also on the $50 you earned as interest. This compounding effect can lead to significant wealth growth over time. Many financial gurus preach that investing is a long-term game. It's growing your wealth steadily over time. This concept is vital to understand. Unlike gambling, where you can make a lot of money quickly and lose it just as fast, investing is growing your wealth gradually, planting seeds today that will grow into fruitful trees over the years. But beware, investing is not without its challenges. It requires research, patience, and sometimes the courage to take risks. And while it may seem complex and intimidating at first, anyone can learn how to invest with the right tools and mindset. There's a multitude of resources available online and offline to help you understand the market, learn about different asset classes, and make informed investment decisions. It's essential to understand that investing isn't a luxury reserved only for the wealthy or the privileged, a strategy that anyone can use regardless of their income level. It doesn't matter how much money you have. Even with a small amount, you can start investing and gradually increase your wealth. It's making your money work for you instead of you working for your money. What it takes is a little bit of knowledge, a dash of patience, and a sprinkle of courage. To sum it up, investing is financial independence, security, and peace of mind, creating a financial safety net for you and your loved ones. And most importantly, investing is for anyone who wants to grow their wealth. Retirement planning is preparing for the longest vacation of your life. And just like any other long-term vacation, it necessitates an unerring strategy, a comprehensive plan that can take care of every eventuality. Retirement planning should be seen as an expedition to the future. It's like packing your bags for a trip that never ends, so make sure you pack well. The first step to a successful retirement plan is starting early. This step is a cornerstone of a rewarding retirement. Time, in this context, is a valuable resource, a treasure trove, which, if managed well, fuels the growth of your financial nest egg. The earlier you begin to save, the longer span your money has to flourish and multiply, harnessing the power to compound. Compound interest, as Albert Einstein famously said, is the eighth wonder of the world. It is an engine of wealth that works tirelessly to grow your savings. Now, a vital facet of this conversation is about maximizing your savings. Supercharging your retirement savings is an art that can be mastered by taking advantage of employer matching programs if they are available to you. These programs are a goldmine that translate to free money, a financial windfall of sorts. If your employer offers a match, it is indispensable that you contribute at least enough to get the full match. This is a return on your investment that is unparalleled, something that you can't find anywhere else. However, planning for retirement is not just a matter of accumulating as much money as possible. This approach would be too simplistic and can leave you unprepared. It's also about understanding how your purchasing power might be affected over time. This is the point where inflation becomes a critical consideration. Inflation is the rate at which the general level of prices for goods and services is increasing. To put it in tangible terms, a dollar today won't have the same buying power in the future. Therefore, it is of utmost importance to factor in inflation when strategizing for retirement. For instance, if you have a projection that you'll require $50,000 annually to live comfortably in retirement, but your retirement is still 30 years away, that $50,000 might have to be closer to $1,000 to account for inflation. Retirement planning is a multifaceted operation, more than stowing away money. It's starting early, maximizing your savings through employer matching programs, and understanding the impact of inflation. It's a journey that necessitates a strategic and long-term approach. But remember, the purpose of retirement planning is living to the fullest. Retirement planning is ensuring that you have the financial liberty to savor the fruits of your hard work and live the life you've always dreamed of. Having the freedom to explore, to learn new skills, to travel, and not worry about money. So start planning today, start laying the foundations of a secure and fulfilling future, because the longest vacation of your life awaits. Be prepared to enjoy every moment of it. Retirement planning isn't surviving your golden years, but living them. Financial education is the tool that empowers you to make better decisions. It's the compass guiding you through the vast, ever-evolving landscape of financial management. This management can be seen as an exciting odyssey, not a static endpoint. The terrain is continually shifting, with new opportunities and obstacles surfacing at every bend. Maintaining a competitive edge in this dynamic environment demands an ongoing commitment to learning and flexibility. Now, you might ask, why is this continuous journey of wealth education so crucial? Delve deeper and dissect 3 paramount reasons for this necessity. The first reason is the dynamism inherent in the world of finance. This ecosystem is in motion, driven by advancements in technology, the creation of innovative investment instruments, and fluctuating economic policies. Yesterday's winning strategies may be today's losing propositions. Keeping pace with these fluctuations is mandatory to ensure the strategies you devise stay efficient and pertinent. You must be ready to brace new winds and adjust your sails accordingly. The second reason underscores the importance of continuous financial education in identifying economic trends and market shifts. Staying abreast with incidents and global news helps you make timely decisions that exploit these trends to your advantage. Current affairs can be a goldmine of information, helping you anticipate investment opportunities or potential risks that could dent your fiscal well-being. The keys to unlocking the mysteries of the market lie in the pages of economic journals, financial dailies, and insightful discussions with industry experts. The third reason emphasizes personal growth, an often overlooked aspect of wealth education. We all make mistakes, some small, some big. However, these aren't dead ends, but stepping stones, opportunities for reflection and improvement. Each error offers a unique learning experience, a chance to refine and perfect your strategies. Through these lessons, we cultivate our wisdom, becoming more proficient at steering through the financial seascape. Yet the question that plagues many is, how do I perpetuate my wealth education? The answer lies in the plethora of resources at your disposal. Books, both physical and ebooks, are treasure troves filled with wisdom passed down through generations. Online courses, flexible learning opportunities, allowing you to learn at your own pace, from the comfort of your home. Podcasts and seminars provide platforms for engaging discussions and debates on various financial topics. Money professionals, with their wealth of experience and knowledge, can offer unique insights and perspectives that can enrich your understanding of finance. Practical experience, however, remains invaluable. Like a blacksmith hones his craft through practice, there's no teacher like the market itself. The more you engage with it, the more adept you become at deciphering its patterns and navigating its intricacies. Just as athletes must train consistently to remain at their peak physical prowess, we must regularly exercise our financial muscles to stay financially fit. It's a habit, a pledge to never-ending growth and betterment. Wealth education is a necessity in the 21st century. The financial world is no longer confined to Wall Street. It has permeated every aspect of our lives, from personal budgeting to retirement planning, from investment decisions to tax implications. Education equips us with the necessary tools to navigate these complexities. Continuous education is the key to staying financially fit, so never stop learning, because the road to success is paved with knowledge. Financial success doesn't happen overnight. It is gradual, a process that demands patience, discipline, and consistency. We have embarked on an extensive journey through the vast landscape of success together. This landscape is diverse, with towering peaks of prosperity and deep valleys of hardship. The journey has been enlightening, guiding us to understand and navigate through the financial terrains of our lives. Our journey commenced by understanding our financial status. It is crucial to acknowledge where we are right now and where we need to be in the future. This understanding is the foundation of financial planning, the starting point of our journey. Your financial status is much like a roadmap, a guide, a beacon that illuminates your path, helping you make the right decisions at every junction, every crossroads. It helps you navigate through the dense forest of uncertainty, and it's always there when you need it, just as a roadmap would be. Then, we delved into the realm of setting money goals. These goals are your desired destinations in your journey. Imagine them as far-off landmasses on your financial horizon, places you want to reach, treasures you want to accumulate. They give you a sense of purpose and direction, stirring you from the inside, motivating you, encouraging you to keep moving forward along your path. These goals, They are your landmarks, milestones along the journey to success. A budget is a tool, a critical instrument that allows you to manage your resources effectively. It is your compass in this journey, a tool that helps you stay your course, keeping you on track and ensuring that you don't stray off your financial path. It helps you to monitor your expenses, to measure your income, and to manage your savings. A budget is like your North Star, always guiding you, keeping you oriented towards your goal, ensuring you never lose your way. Next in our journey, we embarked on a discussion about building an emergency fund. This is your safety net, a protective shield that saves you from the unexpected financial storms that life can sometimes throw at you. It's a buffer, a cushion, a contingency plan for when life throws curveballs your way. Emergency fund is like a lifeboat. It's there to keep you afloat when the financial seas turn rough, to ensure that you don't drown in the ocean of unexpected expenses. We delved deep into the importance of eliminating debt. Debt elimination is a vital step in freeing up your resources for wealth accumulation. It's like shedding unnecessary baggage, getting rid of dead weight that slows you down, hindering your progress. Paying off debt is like lightening your load, making your journey lighter, easier, and more enjoyable. It's like untying anchors that keep your financial ship from sailing smoothly towards the horizon of success. We also ventured into the topic of investing for wealth growth. Investing is a powerful strategy, a tool that enables you to grow your resources exponentially over time. Our journey also led us to the topic of planning for retirement. Retirement planning is a crucial aspect of ensuring a comfortable and secure future. It's like building a cozy cabin, crafting a shelter where you can rest and enjoy the fruits of your labor after a long journey. The importance of continuous financial education, it's the fuel that powers your journey. Knowledge is power, and in the financial world, it's the power that equips you with the skills to navigate the wealth landscape. It's like the wind in your sails, propelling your financial ship forward towards your destination of riches. Remember, every step you take towards financial success is a step away from stress. Start your journey today. In our journey to financial success, we cannot overlook the importance of protecting the wealth we have painstakingly built. As we sail the vast ocean of finances, we need a safety shield. That shield is insurance, a cover that protects your wealth from unexpected losses. It's like your fortress, a stronghold that stands firm against the unforeseen storms of life, safeguarding your hard-earned wealth. Let's delve into the significance of insurance in protecting your wealth. Insurance is like an envelope, a safety net that catches you when you fall, cushioning you from the hard impact of losses. It's a barrier, a protective wall that stands between you and life's calamity, ensuring that your wealth remains intact, even in the face of adversity. It's your armor, your shield, bulwark against unexpected hardship. There are different types of insurance: life, health, home, auto, and disability. Each type of insurance serves a unique purpose, a specific role in your financial strategy. Life insurance is like a safety harness, keeping your loved ones secure when you're no longer there to provide for them. Health insurance is like a medical kit, helping you manage the financial toll of illness or injury. Home insurance is like a protective dome, safeguarding your home, your castle, from damage or loss. Auto insurance is like a car seatbelt, protecting you from the financial impact of accidents. Disability insurance is like a crutch, supporting you when you're unable to work due to disability. Remember, as your life changes, your insurance needs will change too. It's important to review and update your insurance coverage regularly to ensure it accurately reflects your current situation. This is like maintaining your fortress, reinforcing your walls, ensuring your defenses are strong and your protection is intact. Insurance is not a cost, it's an investment in peace of mind. It's like a beacon in the darkness, a lighthouse guiding you safely through the stormy seas of life. Ensuring your journey to financial success is as smooth as possible. It's your safety net, your parachute, your lifeboat in the vast sea of financial uncertainty. It's your protection, your safeguard, your shield in your journey to financial success. Remember, financial success is not only building wealth, it's also protecting it. So get insured and stay protected. In our journey towards wealth, the path is often lined with many hurdles, one of which is taxes. Taxes are a part of life, but with proper planning and strategy, you can ensure that you keep more of your hard-earned money. Welcome to the realm of tax planning. Tax planning is not about evading taxes, it's about understanding the rules of the game and using them to your advantage. It's about making informed decisions that reduce your tax liability and increase your wealth. let's dive into the basics of tax planning. Understanding your tax bracket is the first step. It's like knowing the speed limits on the road to financial success. Once you know your bracket, you can strategize accordingly to reduce your tax liability. Next, let's talk about tax-efficient investing. It's like choosing the right vehicle for your journey. Tax-efficient investing involves selecting investments that offer tax benefits or result in lower taxes. These could be tax-exempt bonds, index funds, or ETFs. Just like a navigator uses a map to chart the best route, you need to utilize tax deductions and credits to carve your path to lower taxes. Deductions reduce your taxable income, while credits reduce your tax bill directly. These include deductions for mortgage interest, charitable donations, and credits for education or energy-efficient home improvements. Remember, tax planning is a continuous process. It's like adjusting your sails to the changing winds. As tax laws change and your financial situation evolves, your tax strategy needs to evolve as well. So keep yourself updated and seek professional advice if needed. Let's remember a key principle. It's not about how much you make, but how much you keep. So plan your taxes wisely and keep more of your hard-earned money. In the end, success is about building wealth, protecting it, and making it work for you in the most tax-efficient way. As we forge ahead on our journey to financial success, we must also consider what happens to our wealth when we're no longer here. Welcome to the world of estate planning, a crucial but often overlooked aspect of financial planning. Estate planning, in essence, is about ensuring your wealth is distributed according to your wishes after your death. It's about creating a roadmap for your wealth and leaving a legacy that outlives you. First off, let's talk about wills. A will is a legal document that outlines how your assets should be distributed after your death. It's like the GPS for your wealth, guiding it to the right destinations. Without a will, your wealth could be distributed according to state laws, which may not align with your wishes. So, it's crucial to have a will and to update it regularly as your financial situation changes. Next, let's delve into the roles of executors and trustees. An executor is like the captain of your wealth ship, steering it according to your instructions after your death. They are responsible for settling your estate, including paying off debts and distributing assets. A trustee, on the other hand, manages any trusts you establish as part of your estate plan. They're like the caretaker of your wealth, ensuring it's used according to your wishes. Now, it's important to remember that estate planning also involves considering the tax implications. Without proper planning, your estate could be hit with significant taxes, reducing the amount your heirs receive. So it's important to strategize in order to minimize these taxes. This could involve gifting assets during your lifetime, setting up trusts, or purchasing life insurance. Let's remember that estate planning is not just for the wealthy. It's for anyone who wants to leave a legacy. It's ensuring that your wealth benefits those you care about and supports the causes you believe in. So plan wisely and leave a legacy that reflects your values and your journey to wealth. Now let's delve deeper into the world of real estate investment. Real estate investment can be a lucrative pathway to financial success, provided you understand the basics and are willing to put in the effort. Firstly, let's understand the basics. Real estate investment involves purchasing property with the intention of earning a return on the investment. This can be through rental income, the future resale of the property, or both. The types of property you can invest in range from residential homes to commercial properties and even vacant land. Now let's discuss the pros and cons of investing in real estate. The advantages are numerous. It can provide a steady income, act as a hedge against inflation, and also offer tax advantages. However, there are also potential downsides, such as the need for ongoing maintenance, the risk of property value decline, and the illiquid nature of real estate investments. So, how can you be successful in real estate investment? Here are a few strategies. First, research is key. Understand the market conditions, location, and potential growth factors of the area where you're planning to invest. Second, don't forget to factor in all costs, including mortgage payments, property taxes, insurance, and maintenance costs. Third, diversify your investments to minimize risk. And finally, consider seeking professional advice if you're new to real estate investment. Real estate investment can indeed be a stepping stone to financial success when done right. It requires careful planning, thorough research, and strategic decision-making. But with the right approach, it can be a valuable addition to your wealth-building strategy. From the tangible world of real estate, let's now move to the intangible, yet equally exciting world of the stock market. Investing in the stock market can indeed be a roller coaster ride. but with the right knowledge and approach, it can also be a path to financial success. Stock market investment involves buying shares of publicly traded companies with the hope that these shares will increase in value over time. When you buy a company's stock, you're buying a small piece of that company and you become a shareholder. So how can you be successful in stock market investment? Here are a few strategies. First, diversify your portfolio. Don't put all your eggs in one basket. Instead, invest in stocks across different sectors. Second, invest for the long term. The stock market can be volatile in the short term, but over the long haul, it has historically trended upwards. Third, don't let emotions drive your decisions. Stick to your investment strategy, even when the market is going through ups and downs. And finally, continuously educate yourself. The more you understand about the stock market, the better your decisions will be. However, it's important to remember that the stock market also comes with its fair share of risks. The value of stocks can fluctuate dramatically, and there's always a chance that the company you invest in could go bankrupt. So it's crucial to carefully consider these risks before investing. The stock market requires knowledge, patience, and discipline, and with the right approach, it can be a powerful tool for wealth creation. Let's now venture into the new frontier of the financial world: cryptocurrency. This revolutionary form of digital money is rapidly gaining popularity, and understanding it can open up new avenues for financial success. But what exactly is cryptocurrency? Simply put, it's a digital or virtual currency that uses cryptography for security, with the most well-known example being Bitcoin. Unlike traditional currencies, cryptocurrencies are decentralized and operate on technology called blockchain. Now, let's weigh the pros and cons of investing in cryptocurrency. On the positive side, cryptocurrencies have the potential for high returns. Some early investors in Bitcoin, for example, have seen massive profits. Cryptocurrencies are also relatively easy to buy and sell, and they can be a good way to diversify your investment portfolio. However, investing in cryptocurrency also comes with its fair share of risks. The value of cryptocurrencies can be extremely volatile, with dramatic price fluctuations happening within a short time span. Furthermore, because the technology is still new, it's subject to regulatory uncertainties, and there's a lack of consumer protection. So how can you be successful in cryptocurrency investment? Here are a few strategies. First, only invest money that you can afford to lose. The volatility of cryptocurrencies makes them a high-risk investment. Second, diversify your cryptocurrency investments. Don't put all your money into one type of cryptocurrency. Instead, consider investing in a variety of different cryptocurrencies. And finally, like with all investments, educate yourself. The more you understand about cryptocurrencies and the technology behind them, the better your decisions will be. Cryptocurrency investment can be risky, but it can also be rewarding. It's a new and exciting area of finance, and it's definitely worth keeping an eye on as we continue our journey. A financial advisor. In simple terms, a financial advisor assists you in managing your money. They can provide guidance on a range of financial matters such as investing, retirement planning, estate planning, and even tax strategies. Choosing the right financial advisor is a crucial step. Look for advisors who are certified, have a solid reputation, and specialize in the areas most relevant to your financial goals. Remember, a financial advisor should understand your financial situation, your goals, and should be ready to work with you to craft a plan tailored to your needs. So, how can a financial advisor benefit you? For starters, they bring their financial expertise to the table, helping you make informed decisions. They can provide a clear perspective on your financial situation, identify risks and opportunities, and help you plan for the future. They can be particularly valuable in complex situations such as planning for retirement or managing investments. A good financial advisor can help you navigate the complex world of finance, enabling you to make informed decisions and steer clear of financial pitfalls. Remember, the goal is not just to accumulate wealth, but to effectively manage and grow it.